Hi, Lydia.
Hey Dale,
Welcome back.
thank you. Thanks for having
How are
me,
things?
as
How are
always.
things going for you, my friend?
Going well?
Okay. Well, we have. I recall seeing a tweet. You were looking for one more dip in the pound that took place before it marched again back towards new highs. Is that what you're still seeing?
Yeah, actually, technically we got that. So, actually, I want to share the down.
Okay.
The, I think that the fundamentals have actually changed a bit since we last spoke, and with Yellen coming out a lot more hawkish than
True.
I think anyone has expected. And in before that, it had taken the dollar quite a while to respond to to the better economic news and data that was coming out, and we got this choppy topping action. Well, it was a consolidation. I don't even think it was a topping. I think many of us were expecting a break higher, even above
Yeah, a
$1.6820.
lot of people thought that the taper that happened last week was priced into the market, and may have been her statement about rates going up within 6 months that was kind of a wake up call.
Right,
But
right. That
but
was
no
a wake
follow
up,
through really since then.
surprisingly, and it looked like we were going to get some on Monday with the jabs and spikes lower. And we didn't really, like you said, get the follow through. When the U.S. came in, the dollar actually weakened.
Yeah, so
And
we're at
mhm.
a what used to be a pretty significant support level, and now it's a potentially significant resistance level if we don't get through this 166 region.
Yeah, I'd say so. So that's what most of us are looking at as it starting to even break higher. Um, it's looking like $1.66. Yeah, maybe even a little higher. $1.66, $1.6620.
I wanted to ask you something. It's been talked about in our community, and I believe Jamie Coleman talked about it. Maybe it was Jamie Satil that the algos and the HFTs are making it much more difficult to trade. How is this environment? How are you interpreting the kind of spiking action that comes out of nowhere and no follow through? We had one of those whips, I believe it was Monday, in both pound
Right.
dollar and euro dollar. Do you agree that
Right.
the robots are making this playing field more difficult for retail traders like us?
Yeah, absolutely. I think
How are
so.
you adjusting to that?
You either have to go real short term or real long term.
Right, that's
That's
a pearl. Okay, yeah. So the swing trading is more difficult. So you would either narrow your time frame and look for scalps intraday, or you have to give the market more tolerance to be there for a position. Is that what you're saying?
right. Yeah,
Okay.
absolutely. A lot of choppiness, a lot of and your patience threshold has to, you know, has to be there too, because even with the so if you go longer term, it's been a lot of choppiness. You can get shaken out of positions, and then before it goes your way. But that's always been the case. But now, so it's the duration of the chop is even it's going over weeks.
Yes.
Whereas before we probably would have seen it, maybe Monday would be a choppy day, and then we get more trending action during the week. And we're just not seeing that at all. I'm just looking at a 4 hour on the pound, and you can look at the euro too. I mean, we've just had almost a month, 4 weeks of just this range bound, choppy, spiky
Do you
action.
think that these forex investigations of the major banks might also be? I know it's not. We're just guessing here, but um, volume is down, volatility is compressed. Do you think that that pulled some players out of the game, and that's why we're seeing this?
I mean, it could be a lot of things. I think for forex, that could actually be, that could be a consideration. It could be just I don't know if it's risk aversion per se. I don't think we've seen that, but just a lot of different geopolitical things going on too around the globe, where it's not the markets are not reacting in panics, but just it's everything's more hesitant. Everyone's just a little bit more willing to hold off or just to bring things closer to the vest. I mean, I think we're just trading in a different kind of uncertainty where we're not getting the panic moves or the quicker moves that for the longer for longer moves or bigger moves, but we're getting just a lot of short choppy actions. I mean, there was even a couple hours ago, about an hour ago, the market was like at a standstill.
Yeah, like being in the eye of the hurricane.
Right, right,
Yeah,
right.
so
So
we have all this compression of volatility that eventually we come out of. I'm not sure what the trigger is going to be. Any catalysts that you see in the pound on the fundy side that is giving you a bias as to whether we see 170 or 160?
I mean, the pound fundamentals are strong.
Right.
They're strong. They've been strong for a while, and I would like to that I would like to think that we would see more follow through in pound strength, because when we got the rallies of last year, the fundamentals were emerging. You know, they were the numbers that we were getting were stronger, and but we were it was the first time we had seen strong numbers after such a shallow recovery, and now it's maintained. It's been sustainable, and the BOE has turned quite hawkish as well. But I would venture to say that they are not as hawkish as the Fed, and that might be why we see, in my mind, we see the dollar strengthen.
Okay. So I also noticed a tweet today. A lot of people trade that pair. Pound looks like it's breaking right here. Is there any news? I'm top picking it today. I was a bit early. I'm now even. Um, the pound Aussie you were commenting
Oh
on
yeah, yeah,
Twitter
yeah.
today, and yeah, I do want to get to euro pound because that looks vulnerable to me to maybe around the 82.50 level or so. But
That's
yeah, you were talking about pound Aussie. You thought it had run its course, at least short term, for this decline.
well. I had saw that maybe it was last week. Yeah, it was last week. I was looking at the charts, and I saw, and I'm not a big charts pattern person. So, and one of the only patterns I can ever really see is a head and shoulder or an inverse. So,
Right.
I thought I had saw that on the Aussie, but it's not something I would tweak because I'm not a patterns
They're
expert.
popping up
But
all over these patterns.
oh, I'm
These
sorry.
head and shoulders are popping up all over.
Aren't they? Aren't they? We're seeing, people tweeting them out a lot, across a lot of different asset classes too, not just in the forex pairs. And two really great traders, Pip Czar and Peter Brandt, both tweeted out the pound Aussie, and they're both,
Yeah,
chart patterns. That's what they do,
yeah,
chartists. So that when they did that, when they tweeted it out, I said, "Oh, that's interesting," because I had thought that the RBA was dovish with, the BOE slightly hawkish. And I think that the RBA surprised markets yesterday, and it's why we're getting this huge break in the pound Aussie at $1.80. With that breaking, which at the beginning of the week on Monday, it looked like that could be the scenario, and then we had the pound Aussie firm up a bit on that Monday, and this could really run to $1.76. I think a lot of people are really looking for a major pullback, and this is just still corrective. This is actually still a corrective move off the 2013
yeah.
rally.
A lot of things look like that. The sterling yen looks like that. The euro yen. The S&Ps made new highs, but the pound didn't make a new high. Didn't take out last year's high. We have a lot
Mhm.
of failing rallies across the board that are acting differently than they did. They'd be making new highs with equities all last
Right.
year, and that has shifted.
Right, right. And so I don't know which is the leader in this case. Is it equities, and we're just taking a breather before a next leg higher, or are is the forex pairs kind of signaling some hesitation that might start to play out, even more so in equity markets. And the same thing too, like you mentioned the S&P. S&P hasn't had any follow through either way either.
Yeah, it's
So
really. We ended the
we
year at
get
1850, and where are
right,
we now? We've had some big trades both ways, but we're up
exactly. But
around, I don't know what, 19 handles or so with all
mm,
this euphoria. If someone put a gun to my head, I would say the FX markets are right, because although there's these things about manipulation, it's just short term stuff, front running, things like that. But the FX markets are much more difficult to manipulate than equity
true.
markets. They're too deep. It takes too much
Hmm.
money. Doesn't take
Right.
as much POMO to move stocks as it would to move currencies.
Yeah, that's true, and I agree with
So
that.
if the pound is failing here on this little bounce, what are your next major areas of interest on the long side or support?
Um, on the long side, as this corrects this move higher, we look at the. So I'm trying to pull up the levels. We'll pull up the 6.8, and so it looks like this 50 fib from last week's decline has been broken above, and as such, we can expect price to move as high as 66.16, 66.12, which is that support region
Okay,
that I've seen noted out, and that you just
right.
mentioned as well. Um, and so we'll see if the dollar can follow through. It's been kind of frustrating, even on this decline, this recent decline. It's been frustrating waiting for the decline. We had been, getting bids all through $1.66, and we finally got the break higher after the FOMC last week.
Yeah.
But now we didn't get followed through this week.
So,
So
you know what I'm noticing in your voice? Tell me if I'm correct. Um, you're pretty neutral here.
yeah,
Okay, okay, not a lot,
yeah,
not a lot of conviction, and it's wisdom to admit you don't know what to do and do nothing.
I've done a lot of nothing.
Okay.
I've done a lot of nothing as I've been waiting. I've gone short a couple times during this choppy period. But was really waiting for the drop that we got last week to go long.
Mm-hmm.
And but Yellen's reaction did the first initial reaction after the FOMC last week did not convince me. It was the way the market reacted days after that, where we did get followed through lower, and we broke through $1.65, and then we closed the week below $1.65.
Right.
Those were the things that had me thinking, oh, okay, the market might be seeing a fundamental shift, and truly believing that the Fed would actually raise rates 6 months and still continue the taper. Will continue the taper to its end and then raise rates so
Did
quickly.
you watch
Uh,
Lydia? Did you watch the testimony?
I watched some of it.
Okay.
Yeah,
Did she instill confidence in you while you were listening to her?
I I I think she sounds convincing. I wouldn't. She doesn't. She doesn't. She sounds unmoved, which
Okay.
is I like her conviction.
Okay.
And that's really what has surprised me. Many people thought she would retract, or we see some backpedaling from the 6 months comment, and she's been resolute. And to have is it Plosser come out yesterday or 2 days ago, maybe it was Monday, and kind of reaffirm what she said was surprising to
Mm-hmm.
me. It's been surprising to me, but the lack of market reaction too. Um, I shouldn't be that surprised off of a correction. So I will be interested just to watch this correction. I'm not convinced on the bull move as I was just a couple weeks ago.
Right. So if we had another decline, I've seen some counts that could take the pound down. I see you have that area highlighted around 163,
Right, as we know,
163.20. And
and right to 162.50 down here.
okay.
It's last few
And that
lows.
wouldn't really interrupt the long-term bull trend in the pound, would it?
If we get a sustained break below $1.6250, which would be a weekly close below that level, that would be
Okay.
huge. You'd
Yeah, that was a big area for resistance, and then it's held so many
exactly
breaks at that level. So
right. And
yeah,
we've continually come into this level and found bids, and um, even a little prior back where we had broken here, we spiked, but we closed higher. So we've this, like you said, it was a huge level coming up. It's been a huge level coming down even since the end of last year.
right.
It's been a huge level and a big area of support. If we see a weekly close, and it would have to be a weekly close below $1.6250, we would start to see a fundamental shift, I think, in
Yeah,
pound.
then you're talking mid 150s or so.
And we've talked about $1.55. So
Okay, well then that's yeah,
so if
interesting. All right.
So if we do get that close below $1.6250, $1.55 is not. I mean, it wouldn't be a surprise, but we still have $1.60 to contend with there. So $1.6250 right now would be huge. And I think for me this week, I'm really just wanting to see if the market believes the Fed, because they did last week. We got followed through to $1.65, which I was surprised about, because the last time we saw, prior to that, when we saw Yellen, we didn't get any follow through from the market. So um, we actually got that spike higher.
What do you make out of the very weak recovery and two lower peaks in sterling yen? Well, to me, it seems pretty heavy. We're getting a bounce here now, but we have that impulsive waves down, and long term, we made two lower highs.
Right, right, and to me, like again, last week when we were, I think, here above $1.70, I thought we could, maintain some momentum
Right.
higher. And again, we got the break of last week, and if we having trouble with this 170, as you see all these attempts into that level,
Yeah.
your presumption will be right, and we'll see a break lower. And right now we're just range bound, $1.6750 at the bottom, and $1.70. So even where price is now, yeah, contending with $1.70, we'd have to see a weak close above 170 to think that the pound yen was still maintaining a bullish
Yeah,
momentum.
that was the number I was looking at, the 170 level for potential short sales. So,
Hmm.
it sure isn't showing the same type of mo it had last year, is it?
None of these pairs,
Yeah.
none of the pairs. Even like 2 or 3 weeks ago, we were seeing a lot more conviction from a lot of the pairs. The pound kiwi is the same way here, where I had a fib off this level has been crushed with the recent decline. This is a major bearish move. It's looking to significantly retrace its rally off new lows, off these all-time lows. So yeah, it's interesting because the pound story is still very bullish, and you have to think that these would be major corrections and well earned corrections in a lot of these pairs, and see what happens. I think if we continue with these more calls for war, and these more kind of, I mean, invasions is what we've been really witnessing, even just around the world in the past year, that the risk aversion might actually start to follow through in the market,
Accelerate.
and maybe.
Yeah.
Maybe we just were in an era where the markets digest these type of events. After 2008, we just digest these kind of events a little bit with a little bit more sanity.
Hopefully, hopefully, so we have to keep one eye on the charts and one eye on the borders of Russia and Ukraine, one
Right.
eye on the South China Sea with China possibly exerting their influence, and one eye on Syria as things
Yeah.
metastasize and NATO is involved as Turkey shot down a Syrian jet, and Israel projecting some power into Syria with airstrikes. And how long can Israel be patient, waiting for Iran to give up its nuclear ambitions? So we're definitely in this geopolitical environment.
Yeah.
And do you have anything new happening on the blog or your website, or would you like to show it to our community so they could see what they get? I do encourage people to follow Lydia on Twitter at Faith Mike, and there's her website and a lot of great research by Lydia. We have a lot of people in our community that follow your work, Lydia, so a lot of respect in the LAR community for what you do. Thank you.
Thank
Yeah,
you.
thank you for being with us today.
Thank you for having me.
All right, Lydia.
Thank
Good hunting in these quiet with spurts, action, and hopefully next time we talk, we have some trends in place.
Okay.
All right, Lydia.
Happy hunting. Take
Bye
care.
bye. So 162 and a half line in the sand for Lydia.